Welcome back, traders and investors. This is Joel Alconin on Benzinga's Pre-Market Prep, brought to you by Charles Schwab. And on the line, I have Tim Melvin of the Deep Value Investment Letter. Tim, how you doing this morning?
I'm doing fantastic. How are you guys up in Detroit today?
Well, it's going to get into the mid 70s, so I broke out the shorts again, and then we got a big 1 o'clock game here in Detroit against the White Sox, maybe setting us up to play your Orioles.
Oh, that's going to be a fun series if that happens. I mean, that would be some great playoff baseball. I mean, obviously, I'm pretty excited about the playoffs coming up with us having home field advantage. So,
And the best record in baseball, right?
absolutely, first time in many, many years for us. So, we're going to enjoy this.
Okay, so we have a bank IPO today. Tim,
Yeah.
when is the last time we've had an IPO in the banking sector?
We've seen some small ones. There's been two, I think, this year, but one of this size, probably got to go back to 2007.
Really? And I mean, just the financial crisis just put the kibosh on that, in your opinion?
It pretty much, yeah. If you're doing an IPO, you want to have something at least exciting to sell. I mean, how are you going to pitch a bank over the last 4 or 5 years? Hey, I've got stock in an institution that may or may not survive the next 2 weeks, but you should buy some. That's a tough sell, guys. So,
So how do you analyze this bank stock, Citizens Bank, off the IPO? Is this something? Have you been offered shares in it? Is something you plan to participate in, or is it something you just kind of Is it probably well, this kind of volume? Tim Melvin doesn't want to be involved, is what
I
I'm.
I, I haven't purchased an IPO since I'm going to go out on a limb and say 1994. It's not what I do. I mean, this Citizens is coming out. It's going to be at a premium to its asset value. They have a fantastic branch network in the United States, but the valuation just doesn't work for me.
What about the book value?
This is going to trade above book.
Oh, it is. Okay.
Yeah,
Okay.
yeah.
I thought Nate yesterday say it might not. So it's trading above book value, heavy volume. You'll let everybody go after it, and then maybe take a look at it another time.
If we see post offering selling, which is a possibility, then I might get interested as it gets down closer to that 80% of book value where I like to talk about banks. This is just not going to be priced at a level where I'm going to be interested.
Okay. All right. And what about some of the other smaller cap banks? Merger and acquisitions been kind of quiet as of late. Anything that any banks or any
Well,
particular sectors
let
that.
me circle back to banks and let's look at another sector that's just really starting to pop up some bargains in here. If you look at the oil drilling stocks right now, it looks like we're going into this deep, long-lasting, eternal recession, and I'm not quite sure that's the case. The economy's not great, but it is okay. It's better than it was. And while we've seen budgets dial back a little bit for drilling this year, that's going to pick back up in 2015. But these stocks have been blasted. I don't know if you guys follow any of the big offshore oil drillers.
Well, I know Heroes one that you talked about, Hercules
Y-
Offshore. That cut a haircut there at $3. What was the move that drove that
You know,
down?
if it could go wrong, it has gone wrong since we bought the stock. And I bought more late last week, by the way. Should it continue to go down, I'll buy even more. First, they had a rig that was under contract in Angola. And of course, the government of Angola backed out. So that rig is idle, has to be moved. That's not cheap. But in the latest fleet report that came out last week, they've had to idle more rigs in the Gulf of Mexico just because everybody's continuing to delay spending on drilling, both shallow and deep water. So here is sitting there now with several rigs idled, which obviously hurts your cash flow. But when you look at the company, and this stock is now trading at 45% of book value, um, you could almost liquidate this company and double your money at this point in time if it wasn't a fire sale. So stock's incredibly cheap. If you look out a year, even 2 years if you have to, drilling activity will pick up, and this is probably a 5 to 6, if not higher, stock at that point in time. So for a patient investor, it's really worth starting to get involved in Hercules here. They're not going to stop drilling in the Gulf of Mexico. As I said, I think demand will pick back up starting next year. It's not just Hercules. Take a look at Rowan,
What's this?
RDC.
Okay.
RDC.
Okay. Wow.
This is one of the better companies in the industry. doing a lot in the offshore and ultra deep offshore. And again, not doing well on the operational front right now. We do have rigs being idled, activities very slow, but this is a world class collection of assets trading at 65% of its tangible book value. That's crazy. Now it may go down as Hercules went down after I originally bought it. I'll just buy some more in that case. Um, and just kind of scale into it. I'm not saying you rush out and put your whole portfolio in these things. So if you look at this chart, you are definitely catching a falling knife.
And how much is this related to the price of crude oil? I mean, that's taking a considerable haircut. Do you think some of it's related to that?
It's some of it, but remember, the majors started dialing back their budgets earlier this year when oil was still, substantially higher than it is right now. Just little bit of excess supply in the marketplace, demand a little slower than everybody had hoped by now. As you know, the economy's still a lot weaker than everybody around the world had hoped by now. But as I said, the demand's going to come back online. I think next year we're already seeing some signs of growth in places like Mexico and Brazil that are actually offsetting some of the offshore drilling activity weakness in places like Europe and the Gulf of Mexico. So I just think these stocks are now at the point where they're to start buying them. I mean, I assume you guys drove to work this morning. You're in Detroit, so maybe you had to turn the heat on instead of the air conditioner like I did. But um, energy demand's not going away. Oil and gas is still very much part of the future, and we're going to have to drill for it. And a lot of that drilling activity's going to be in the newer fields that we're finding offshore all around the world. So these things are just too cheap at this point in time.
Okay, one more shot here. When you were on one of our previous shows, took a look at Ameris Bancorp, and that stock had a nice run over $24. I'm not sure where your target was on it, but it's taken a little bit of a haircut, finding some nice support here under 22. What's your outlook for ABCB?
ABCB. Well, it's the same as just about every other bank that size. It's going to keep going higher over time. And remember, my time frame. I know that most of your guests, replace their entire portfolio during the course of the conversation each morning. My time frame's a little bit longer than that, so we tend to be looking out, 2, 3, 4 years from now. Stock is now trading. It's about a 1.5 times book value. I see this bank making more acquisitions in the future, continuing to move higher. There are better opportunities in the banking sector than this one at this level. But if I owned it, I wouldn't be rushing to sell.
Okay. What about the coal sector and specifically the coal plants? Are you finding any value there?
Yeah, and I own some coal stocks. I have Arch Coal in the portfolio, and it's an option on the coal industry. If your time frame's less than 3, 4 years, don't buy the coal stocks here because it's going to take that long. This is an industry undergoing a huge shift. We're still going to burn coal in the U.S. We still get percent of our electricity from coal. Coal is actually going to be the fastest growing fuel between now and 2025, according to the International Energy Agency. But we're going from more of a domestic market to more of an export market. Europe and Asia are still burning tons of coal. They're going to continue to do so. They need the cheap energy, but it's going to take some time in this sector. This is not a short-term play by any stretch. The one I'm really watching, and it's finally at long last getting cheap enough for me to buy, is Peabody Energy, largest
I
coal
was just
company in
going
the
to
world.
guess that, Tim. I,
Yep.
w- I,
Now,
w- I, w-
finally, I've been waiting all year. It's finally below 90% of tangible book value. We can start to get involved in this company.
okay, Peabody Energy. Yeah, they got booted out of the S&P 500, and that put some pressure on it. Then Goldman Sachs downgraded it to a sell. So, yep, that kind of looks like a Tim Melvin chart
That's
there.
that's a Tim stock. I mean, if you hear that it got booted out of the index, you can figure I'm at least looking at it.
looking for value. Well, what about relative value just in the entire market here? You mentioned getting a little bit interested in the coal sector. You mentioned the drillers and the banks here. What about? I know you do your scan and you talk about the ratio of stocks that meet your criteria. Markets pulled back off the highs a little bit. Are you getting any better readings on just finding value in the overall market?
No, outside of the energy and the small bank complexes, we're not seeing a lot here. I mean, yeah, we've pulled back a little bit. As of last night's close, we were 1.9% off the 52-week and all-time highs. This is not that's not a severe correction. Okay, so not a lot of new opportunity created in this little pullback.
No, and I mean, and if you're waiting for more of a correction, it just seems like the buy the dippers are in ahead of you. So, any final advice for our crowd?
Yeah, I talk to everybody about the small bank trade all the time, and it's people get the glazed look because it's not all that exciting. But I'm telling you, if you're not in this small bank trade, you're leaving an enormous amount of money on the table. So whether it's your IRA or some other long-term pool of capital that you've got, you need to be in some of these small community banks. This is the closest thing to free money you will ever see on Wall Street. We ran a screen yesterday for companies trading below book value that were buying back stock and had insider buying in the last 3 months. They were all banks,
Huh. Okay.
all little banks. I
All
mean,
right. In the big banks, you just don't like to pay attention. They're just not on your radar. Just not enough value in them, like a Bank America or a Citigroup, something like that.
mention those, and they're trading at what look to be, reasonable multiples of book value. But I'm not that interested in the big banks at all. And it goes back to the if you can't understand it, don't buy it deal. Try to read a 10Q or 10K from one of those two banks. The footnotes are longer than the text. So that kind of stuff generally tends to end up in the garbage can around here.
Yeah, Barron's was real bullish on Bank America over the week. They said they'd had $65 billion in legal costs and restitution over the last 3 years, and they were kind of getting away from that, a little bit steady revenue stream, but they're not convincing you yet, huh, Tim?
No, no, not at all. I just don't have any interest in the big banks. I think the real money to be made here is in the smaller banks. Probably some great trading opportunities in the big banks because they are very news driven, but the small banks are just going to be, the slow and steady path to just what I think are going to be huge profits over the next several years.
Okay, we've had Tim Melvin on the line of the Deep Value Investment Letter on Benzinga's Pre-Market Prep, brought to you by Charles Schwab, sharing his thoughts with us. Tim, as always, thank you for the great input, and we'll speak to you again soon.
All right, thanks, guys. Have a great day.
Okay.